Hi, my name is Pete Hahn, and thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of video tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues. Hi guys, welcome to the video. In this video, we're very excited to introduce our very popular divergence indicator, but this time for the TradeStation platform. Very excited. This is our very first premium study to be offered on the TradeStation platform. We've already built this and refined this tool on the thinkorswim platform, and many of our viewers have requested this same indicator be adapted and ported over to the TradeStation platform. So here it is, guys, and what we're looking at right now is a chart showing divergence based upon two components of the MACD. We call this divergence MACD X2 because it's producing divergence signals on the histogram, but it's also producing divergence on the MACD value line. And I've got some trend lines marked up on the bottom. Those trend lines that you see on the bottom on the MACD, those are hand-drawn trend lines. And what I've done is I've drawn those in so that you can see how they correspond to the signals in the upper price graph. The trend lines that are drawn in the upper price graph, like this blue one in the far right, that's actually drawn by the program. So we've got a lot of ground to cover. Let me go ahead and first issue the disclaimer. The disclaimer is that I am not a professional trader, nor am I a certified financial advisor. Nothing in this video should be interpreted as an advertisement to buy or sell any financial instrument. I'm here to build the tools that help to make your job as a trader easier and more efficient. I've got this video packed with a lot of material. The indicator includes this chart-based version that you see here. It includes a radar screen, and it also includes a scan, a custom scan. And it's not just the standard divergence. As you see here, these are standard divergence signals, but we've also got another companion study along with this that does the hidden divergence. This video is essentially the instruction manual for the divergence indicators that we created for the TradeStation platform. So if it seems like we're going a little too quickly, just go ahead and press the pause. You can go ahead and hit the back button and replay some portions of the video that you missed, but we're going to try and get all of this stuff compacted into a nice short video. It's probably going to be about 45 minutes long. Our viewers who are familiar with our work in thinkorswim and who have purchased this version of the indicator for thinkorswim, they are going to be jealous of what you guys in TradeStation are going to have access to, because I tell you what, that radar screen, boy, that's a beauty. It's the first radar screen code that I've ever written, and wow, it's fantastic. I can't even imagine what I'm going to think of next. I'm going to be able to build a lot of premium indicators for the TradeStation platform, but our model here is to provide most of our material for free. We're here to educate, we're here to train, we're here to provide technical tools to help you guys get your stuff done. And we just have to have some premium stuff to sell in order to pay the bills so that we can sit here all day and dream up new tools for you guys that you don't have to pay for. Okay, and at the end of the video, we're going to introduce the pricing, and the pricing is going to be an introductory pricing with the additional features. This indicator is going to be eventually going to increase a little bit more than the thinkorswim version, and the thinkorswim version is going to probably receive an upgrade after my viewers get to see what you guys get and they don't. And I'll make sure I cover this right now. The way we work here at Hahn-Tech, we create an indicator. If we upgrade the indicator, and we frequently do, this indicator for thinkorswim, for instance, is on its third upgrade already. Anyone who purchased the previous versions gets the upgraded version no charge. We don't charge an upgrade fee. When we upgrade the indicator, we're doing that based upon feedback we receive from you who purchased the indicator. So we want to give back because your suggestions make the indicator all that much more valuable and better. We'll give you that upgrade for free. The price increases for anyone who is purchasing it brand new. So keep that in mind when you're looking at what the indicator can do. Once it gets into the hands of TradeStation users and I get the feedback from them, we're probably going to have additional components to add to this some things, features to add to it, and the price is going to increase. And guys, one very important and essential step is to show you how to import these studies into your TradeStation platform. It's very simple. Right click over any chart, select Insert Analysis Technique. From the window that pops up, simply press Import. You have two options here. You're going to be using Import Export Wizard. That will open up another window. You will select Import Easy Language File. Make sure you select the one that says ELD. We don't care about the ELS or the ELA, but the ELD is the one that we want. We'll go ahead and press Next, and then Browse. Then you browse to the location on your computer where you saved these files to your hard drive. You probably received them via email, and you saved them on your desktop, which is a nice place to put things, but I don't like to clutter mine up. As you can see, there's not a whole lot there. I've got a folder set up specifically for TradeStation files, and that's what these indicators will look like. These are the ones for the MACD. Okay, very simple. I'm not going to complete that process because I've already got these installed on my system. Let's take a moment to look at the screen. In the upper right hand corner we have a legend, and that legend shows you the different types of signals that are plotted and the color associated with each. For instance, this dark blue line is double positive divergence. Now what's that mean? What's double divergence? The double divergence is a combination of divergence spotted on the histogram as well as divergence spotted on the MACD value line. So the light blue is the histogram positive divergence, and the green is the value line positive divergence. And you can see these two lines down here. You got this one on the MACD histogram, okay, and that goes along the histogram, and it shows that momentum is climbing while prices are making a new low. That's positive divergence. And likewise, you can see the yellow line here on the MACD. That is the actual MACD value. You can see this trend line down here is also showing that there's positive divergence between price and the momentum of price there as well. So let's go back to the legend here. We've got histogram negative divergence is colored magenta. You can see we've got one little trend line drawn over here, and this one here is showing you that you've got declining MACD histogram divergence and rising prices. So you've got a higher high and you've got a lower low in the MACD histogram. Let's look at the double negative divergence. It's dark red. And so you've got this here from the yellow line, that's the MACD value line, and that goes all the way down to the higher high on the price chart, shows a lower low on the yellow MACD value line. Now that is double divergence. There's also negative divergence appearing on the histogram, but it's so tight in here that I didn't want to draw it from this point to this point and confuse you guys. So because the lines actually cross, even though they're both showing negative divergence, it just kind of muddies things up. I didn't pick the best chart to show you negative and positive divergence. I tried to show you the best signals, the signals that were the most clear. And let's see, we've got histogram positive divergence. That is a light blue, and you can see right here the light blue line is inclining upward along the histogram, the MACD histogram, while the price action is making a lower low. Now you can see that I'm moving around this this plot line here, this trend line, and that plot line is drawn by the program, but you don't want to click on it and move it because the program doesn't know how to keep track of those lines. So if you accidentally move one of those, you're going to have to refresh your chart, and you might actually have to delete the line that you moved because it may actually create another one in its place. Okay, so let's run through the settings. In order to access the settings, I'm going to right click on the chart. I'm going to select Format Analysis Techniques. From this window, I'll make sure that I'm selecting the HT Divergence MACDX2 indicator and select Format. This first setting here, the swing high price, acceptable values are high or close. This setting will affect how the swing pivots are calculated. The default value is high, and what that does is it compares the high of a bar to the high on either side of a bar. If you set it to close, then in order to find a swing high pivot, then instead of looking at the high of each bar, it will be looking at the close of each bar. So it will look for the highest close with a lower close on either side of the bar. That will become a swing high pivot if you set this to close. Let's go ahead and change this to close and hit OK, and then we'll see the changes that occur. You can see the swing high pivots have shifted to be calculated based upon the close instead of the highs, and that has updated the signals accordingly. Okay, let's go to Format and let's change that back to high. And let's change the second one to close, but before doing so, let me explain what this is. Divergence high price. Acceptable values are high or close, and this setting will tell the code which value to use on each candle when comparing the value of the price to the value of the underlying study when calculating divergence. When it's set to the default value of high, then it's going to take two swing pivots and compare the high of each swing pivot, and then compare that to the underlying study to decide if there are divergences present. If you set this value to close, then that will tell the code to compare the close of each swing pivot high to determine whether one is higher than the other. So understand that instead of comparing high to high, it will compare close to close, and that may change the divergence calculation entirely. So let's go ahead and change that to close, and we'll click OK, and we can see how the signals have changed. Also notice that the lines that are plotting from close to close instead of from high to high, so you can clearly see the indicator is telling you that it's using the close of each bar instead of the high of each bar. Okay, so let's go ahead and put that back to high. And I'm not here to tell you which setting is favorable, which one works better. I don't know. I simply use the feedback from other viewers who say that they need to have an adjustment to be able to change the behavior of the code, and so I go ahead and oblige and I put that in there as an option. So you guys can experiment and test all you want and make sure that you get that dialed in the way you like. Now the swing high look back. This is going to tell the code how far back to look for a higher high. And this will affect the ability of the code to define larger structure of swing high pivots and divergence between those two pivots. So the larger value you use, I really don't have a recommendation. I just default it to 8 because that's what looks pretty good on the chart to me. I'm not making money at this, so you guys are going to have to experiment with this and find your own favorite setting here for this. So let's go ahead and change this. Let's increase it from 8 to 15. I'm not really sure what's going to happen based upon this structure of the chart here, but let's go ahead and hit OK. And it really didn't change anything. Notice what you've got going on. Let me close this so that we can see. You don't have anything really beyond 15 or 13 bars before you find a higher pivot. So let's go ahead and reduce that value. Let's go to Format Analysis Techniques, and we'll format this. And instead of using a higher value, we'll use a lower value. Let's use 3, and then we'll press OK. You can see now, for instance, over here where you've got double divergence. No, that's not double divergence. That's the MACD value line negative divergence right here. And you can see that because we reduced the look-back period from 8 to 3, it changed, and instead of showing the divergence from this point to this point, it's now showing it from this little pivot high that occurs in between. Okay, so we're going to go ahead and format that setting again. We'll go ahead and change that to an 8, press OK, and then bang, you can see how that comes across and then finds the other pivot high, and it ignores the one in the middle. Why? Because we used that look back period to say, no, look a little bit further back to see if there's a higher pivot high. Okay, and notice also that it changed from just being a MACD value line divergence, it's also a histogram divergence. This is now double divergence. Let's move on to the next setting. The swing low price and the divergence low price. This is exactly the same as you have for the high. The swing high price mirrors the swing low price. The two up top here actually work on the negative divergence, and these two down here on the bottom, the swing low price and the divergence low price, those operate on the positive divergence. So once you understand one, you'll understand the other. I don't really need to go into detail there. Same exact thing with the swing low look back. It just mirrors the setting that affects the negative divergence, but the swing low look back affects the positive divergence. Here are the colors that you can change, and oh, that reminds me, I need to bring in a chart to show you what colors are available. The platform limits the number of colors that are available. You just can't click this and select from a list or bring up a little palette to show you. You have to actually type in the name of the color, and if it's not within the list of 16 colors accepted by TradeStation, it's not going to accept it. You're going to get an error. So let me show you those real quickly. And there you are. These are the 16 colors that are permitted. Anything else, for instance, you won't find orange on this list, so don't try to type orange into the indicator because it will not work. So go ahead and take a screenshot of this if you want. You can also go to TradeStation Help and type in Easy Language Colors, and it will give you a link where you can find this information anytime you need it. And to continue on with the settings, you see you've got the ability to change the color on all of the different divergence signals. And in the settings, it simply says negative divergence color 1, negative divergence color 2, double negative divergence color. And what I'll do is I'll show you how to connect those so you understand how to change the one that you want. Okay, in other words, I don't know whether I'm changing the value line divergence or I'm changing the histogram divergence color. So I'll show you how to connect those two. We're going to plot the labels on the chart, and once you see the labels, then you'll be able to connect the different signals together. So let's see, and that's exactly the next setting right here. Show divergence labels. So we're going to change that from false to true. It defaults to false. So we'll click OK, and now you can see that you've got labels. So you can see here the ND1, that stands for negative divergence 1. ND2, that stands for negative divergence 2. So how do you connect that to the legend? Let's say the color legend. Over here, you've got value line negative divergence, and that's red. So you know that that is negative divergence number 2. And then you've got in the magenta color, histogram negative divergence. What is that labeled on the chart? That's a ND1, that's negative divergence 1. So now you know that if you wanted to change that color, where you can go into the settings and modify that setting. Okay, and that's right where we left off, the divergence labels. We turn that on. We've got the show pivot high low. Let me show you this real quick. That's set to false by default. Most of this stuff I turn it off just to keep a nice clean chart. These things that I'm showing you here are available that you can turn on until you get used to how to interpret the different signals and understand what the chart is doing. Now we've got these magenta colored dots for the swing low pivots, and we've got the blue colored dots for the swing high pivots. And those little dots do not plot where you have the ending of a trend line plotting a divergence. So you can tell that, for instance, you've got divergence between this little magenta colored dot and this section right here where you've got a PD1. Likewise, you've got an ND1 indication over here. You can see that you've got a swing high pivot right there. There's a blue dot, and that divergence is picked up and locked in here at this point right there. Okay, so let's go ahead and go back to settings. I'm going to right click, format analysis techniques, and let's see. So we just turned on show color ledge. Oh no, we didn't turn that on yet, but that's already on. Okay, so what we did just show you is the pivot high low, and we're plotting those. Show color legend, that's turned to true right now. It defaults to false, so we turn that off by default. Let me move this to the side. I'm going to close this. I'm going to move this over so we can see the legend, and we're going to format. And so right here, display legend at top, it defaults to true. I set it to false because I wanted it down there on the bottom right. So I'm going to go ahead and change it to true, and we'll set that to true and click OK. Now if the price action were up there at the top right hand corner, the legend would be obscuring the price action. So let me show you how to adjust that. We'll go back to format, And you can see there's some other settings here. We've got show colored legend is set to true. Display legend at top, we just changed that to true. Spacing factor, let me show you how that works. You see how well they're spaced right now? If you wanted to increase or decrease that, just change the value here. We're going to change that to 5, and I'll show you how that spreads out the elements of the legend. We'll go back to format, and we'll change that back to 3. Let's see, then the other thing I wanted to show you is horizontal alignment for the legend. The options are 0, 1, 2, and it defaults to 0. Let me show you what it looks like on 0. You see it almost goes off the chart to the right. Now what happens there is it's aligning the left hand side of those legend elements with the last price bar on the chart. And I have this chart set up. Let me go ahead and format window. You can see spaces to the right, I've got 5 bars. So what that's doing is it's giving me 5 bars of empty space, and the legend is plotting right there at the edge of that 5th bar. And if you go ahead and grab the screen with the panning tool, you can go ahead and drag that, and you can see the legend is right there. That's the way it defaults if you turn the legend on and don't adjust any of the other settings. And I did this so that it would be completely off the chart but easily available if you needed it. I really do a lot of work here to try to clean up and not obscure the price action with labels and things like that. So let's see, go ahead and reset that, and we'll right click and format analysis techniques, and we'll go back to format, and we're almost done here with settings, and then we'll move on to the hidden divergence indicator, and we'll show you some other neat things. We'll go ahead and cover the radar screen and some other stuff. Okay, spacing factor, alignment, and alert on close. This is very important. The way it's set to default, alert on close is set to true. What this means is that divergence will only alert. We do have alerts built in. We'll show you how to enable those when we do the live demo. But when you set alert on close to true, that means you're only going to get an alert once the divergence signal is locked in. While the bar to the right of the signal bar is still active, that signal can disappear. The line can, you'll see it in the live demo, don't worry about it, you'll understand. So if you set that to false, then it's going to give you an alert as soon as divergence is possible but not locked in. So I recommend that you run it with alert on close set to true. That way you're only being alerted when the divergence signal has been locked in. Everything else here is simply the settings for the lower study. So this is a basic MACD, and you've got the fast length, slow length, and the MACD length. And this is default settings, as any platform will show, and that's all we've got for the settings. We can go through the general tab. There's really nothing to show here. You've got alerts. We're going to show you how to turn those on. There's not much to do here. You can change the style of the swing high, swing low. You can either change it to point or cross. That's the only thing that makes sense. And the color, the only thing you can change here is the swing high, swing low. Scaling, don't mess with that, please. That's how it plots in the upper price graph. You don't want to change that. So that's all I've got to show you for settings, all right? So great, let's move on, and I'll show you now the hidden divergence, show you some of those signals and how those work, and then we're going to get right on into the radar screen, and we're going to show you the scan. We're going to show you also another version of this indicator that does the RSI and the stochastic full K. Okay, so stay tuned. Okay, and here we are looking at a chart with the hidden divergence indicator. And I just looked at the clock and I noticed we're over 20 minutes in the video, so we are going to kind of breeze through this one rather quickly. We've already shown you how the divergence indicators are plotting on both the histogram of the MACD as well as the value line of the MACD. You can see that we have a dashed line here that is both gray and white. That's actually double divergence. It's measuring divergence, hidden divergence, on both the MACD value line as well as the histogram. So you'll either get a solid white line, a dashed gray line, or a combined dashed gray and white line together. And that's how you'll be able to identify those. This indicator is a lower priced study. We're providing this as a companion to the divergence study. Some people actually might say, well, I'll just buy this one because I prefer this rather than the divergence. And I'll explain the difference between them. But this one does not have things like, well, let's just look at the settings real quick. We'll go to Format Analysis Techniques, then format the Hidden Divergence MACDX2. We'll go to the inputs. We've got, these are the same, swing high price, divergence high price, you get the swing look back period. All of these settings are just the same as the regular standard divergence. You got the colors that you can set up, and you can see here by the color, the white is going to be divergence 1, and the dark gray is going to be divergence 2. Okay, so divergence 1 for this indicator is going to be measuring divergence against the histogram of the MACD. For divergence 2, it's going to be measuring divergence at the MACD value line. Okay? Now we don't have labels, we don't have a legend, this is kind of a no frills. It's meant to be very inconspicuous, and it's meant to blend very well with the standard divergence without the two indicators stepping all over one another on the chart. We'll show you how it looks all together, both indicators on one chart. So you've also got the same alert on close. You have the settings for the MACD. Okay, so we're going to click cancel because we're not going to save any changes there. So this is the hidden divergence, and what I encourage you to do if you've never heard of this, go ahead and Google it. There's lots of material out there. There's lots of professional traders and other organizations that have taught on this topic. It's not something I made up. All I did was read up on it, learn how to identify it on a chart, and then write the code to do it automatically. And so a hidden divergence is different than standard divergence in that hidden divergence is supposed to be an indication of a continuation of the trend. For instance, this one here at the right of the chart, the solid line, as well as the dashed line here, those are continuation of a downtrend. You have a lower high while the indicator at the bottom is making a higher value, okay, a higher high, so to speak. So it's intended to mean a continuation of the trend. From the signals on this chart, you can see that that is obviously not always going to be the case. Nothing that I've seen in the world of indicators, obviously, it can never be 100%. And yet I want you to identify where you have a break or a failure of a divergent signal. What you have then is an expectation. And one of my first mentors in the world of trading, Robert Hoffman, was fond of saying, and he repeated it often, he says, it's great to have an expectation, but if what you expect to have happen doesn't happen, either consider getting out of the trade you're in or reversing your position. So a lot of times people will look at this and say, well, it doesn't always work. Well, guess what? There may be an opportunity when the divergence fails. Enough said. I'm not a professional trader. You guys got to work that out on your own. So let's go ahead and show you what this looks like when we plot both of these indicators together on one chart. And here you go. That's what it looks like when you run both of the indicators together on one chart. And so you can see the standard divergence indicator is going to tell you when the expectation is for a fade or a reversal of the previous trend, while the hidden divergence is intended to show you where the expectation is for a continuation of the trend. Lower lows leading to lower lows, higher highs leading to higher highs. Okay, next up, let's show you the radar screen. Right after the radar screen, we're going to be showing you how to run scans, custom scans. And then we'll show you the live demo. We've got a pre-recorded session here that I did during market hours with a live demo showing the signals occurring and the alerts being triggered. And I'm going to narrate over that recording, and I'll go ahead and explain things as they appear on the chart. So let's go ahead and make the big reveal here and swipe the curtain aside to the right and show you the radar screen. There it is. Okay, so you can see I've got a list of stocks here. Everything is set to an interval of daily, and I've got the radar screen linked to a chart so that I can select different items in the list, and it will go ahead and plot on the chart. You can see, for instance, this Apple, right? You've got, what have you got here for an indication? You've got double negative divergence, and the count is 3. That means within the past 3 bars, we've had double negative divergence on this time frame. And the trend gives you the direction. What's that mean? Okay, in this case, we've got negative divergence. What's the expectation? Lower lows. What this does is it changes the trend color to red to indicate that the price is currently below the most recent negative divergence, meaning that the trend is expected to be down and the trend is holding. Now let's go ahead and go to Amazon. Let's check that one out because that one shows that it's broken. So this one you've got double negative divergence. You've got a count of 14. So you can see that you've got that dark red indication here, and that dark red indication is telling you that that was the most recent negative divergence on the chart. It was 14 bars ago, and you can see that it's broken and the trend is up, right? So it's green and it says broken, which means what? That means that the expectation of lower lows failed, and instead we started making higher highs. So you can see that there could be potential even if these signals fail. You just have to have a plan, know what you're going to do ahead of time if this happens or that happens. And let's see, what else have we got? Let's go ahead and take a look at a different type of signal here. This is a histogram negative divergence. And there we go. You can see the histogram negative divergence is pink, so the color coding matches. If you change the default colors in the chart indicator, you're going to want to change them here on the radar screen. And let me show you quickly how you can access the settings. You simply right click and you select Format Divergence MACDX2 for all symbols. And you can go to the inputs, and here you have all of the same settings that were available. You're missing some things like, you know, labels. We don't do labels on a radar screen. We don't have the legend and things like that are not available. But the colors are there and all the other settings. So if you use something specific on your chart, like if you change the swing high price or the swing low price, or if you change the look back period, make sure they match. That's all I'm saying. Otherwise, you're going to be confused. And the safest thing to do is, until you get comfortable with it, is leave everything at the default levels. That way you know everything matches. And then as you want to experiment, start changing the settings as you see fit. So go ahead and cancel that. It just dawned on me, I should show you how to install this on a radar screen. We'll go ahead and insert a new page. And I'm going to right click across symbol. Actually, I'm going to click inside one of the symbols, and then I'm going to insert symbol list. And this is just one that I made up specifically for videos. I'll double click that, click OK, and then you can see this is just the default of your radar. Format all analysis techniques, and then I'm going to delete some stuff that we don't really need for this. And one of the things, we'll pause right here to focus real quick. This is something that is really important. You see the HTR, you see the lowercase r in there? Let me zoom in so you can see this real clearly. HTR. So what we're doing is we're providing two different files. One is going to be the HT-divergence MACDX2. The other is going to be a HTR, lowercase r, divergence MACDX2. The R stands for radar screen. It's also going to be the one we use for scans. Okay, so be careful that you choose the correct one when you're adding it to the radar screen. Make sure you're using the one that has the HTR in it and not the HT. Otherwise, you're going to get unexpected results. Let's go ahead and move that up a little bit. We'll click OK. And that's how you add one of these to your radar screen. Okay, next we're going to show you the radar screen for the hidden divergence, and maybe thumb through a few charts, and then we'll go right into the scans. Okay, and so all I'll do is go ahead and minimize this radar screen because I've got behind it one that's already set up with the hidden divergence. And let's go ahead and click through a few of these signals here. You've got a MACD value bullish divergence here on Costco, and that was 9 bars ago, and it shows that it is currently holding. And again, you can see right here on the chart that dashed gray line is a MACD value line bullish divergence for the hidden divergence. And this is, again, as I said, an expectation of continuation of the trend. So its trend is shaded in green and listed as holding because the current price is above the point of that divergence. Let's go ahead and look at COP. That one shows that it's broken. And that was quite some time ago, 67 bars ago. You can see that it occurred here. That was expected to be a continuation of the trend, and the price is currently below the price of that previous divergence. Okay, and you may be asking, well, can we do this on other time frames? Yes, you can. You go to page 2, and I've got this one set up as a 5-minute interval. You can see these right here set up as a 5-minute interval. And I set that up and I ran it today during the market hours, and I actually enabled alerts. Let me show you how to do that. You can right click, and this is the same with all of the indicators that we've got here for the divergence and the hidden divergence. We'll go ahead and format HTR divergence MACDX2 for all symbols. We go here to alerts. You can see that's already open as the tab. You want to go ahead and enable alert, and this you want to set it to alert once. You don't want to set it to alert continuously. Trust me, it will go on and on and on non-stop until the bar closes, and if it's a 5-minute bar, you're going to get alerts for 5 solid minutes. So be sure that you set it to alert once. And I had a custom setup here. I had this sound here that's built into TradeStation, and a little pop-up that shows it for 5 seconds. You're going to see that in action in a live demo, but suffice to say, this works right here within your radar screen as well as in the chart. Let me go ahead and right-click and format analysis techniques and show you that you can enable alerts on the chart as well. So I'm going to format the HT Divergence MACDX2. I'm going to go to the Alerts tab, and all you need to do is enable alert once, and then change your settings as needed here. Okay, this is how I usually set up my alerts. Make it audible, sound, visual, and pop-up window for 5 seconds. Okay, and that's that classic TradeStation yellow, kind of yellowish background with blue text. So I'm going to cancel and close. So now you know how to set up alerts on both the radar screen as well as the chart-based indicator. So let's see, I did say we were going to go into the scans next, but before we do so, I'm going to show you the other version of this indicator, which uses, instead of the MACD, it uses the RSI and the stochastic together. Okay, and we're not going to spend too much time on this. We're not going to go over the settings because they're the same. We're not going to really show you how to, like for instance, you see the legend in the right-hand side of the chart. In fact, let me go ahead and correct that legend so that we can go ahead and see all of the different elements, because that will help you identify the different divergence signals. We'll go to Format, Inputs, we'll go here to Spacing, we'll change that to 5. That does the trick, that's beautiful. Close that. Okay, so you can see that the magenta color is RSI negative divergence. You've got the indication here on the chart, and you've got the hand-drawn trend line that I put on the chart right on the RSI. Then you've got double negative divergence. Okay, that's in the dark red. Double negative divergence means you've got divergence measured against the price action and the RSI, and you also have divergence measured against the price action and the stochastic. Okay, so this is not measuring the RSI against the stochastic. That's not any way connected. It's measuring the price action against each one separately. And over here on the far right, we've got another one that's RSI negative divergence. You can see I've drawn the trend line here, and I skipped this one. You see the red line here, that's full K negative divergence. So that's the blue line of the stochastic, and that is your divergence indication. And let me go ahead and go back to, I said I wasn't going to go through settings, but let's go ahead and look at the settings again, because I do want to show you that if you go to Format, that we go down here to the bottom, and that's where you can change your settings for the RSI as well as the settings for your stochastic. And what I did here is I mirrored the Thinkorswim version of the stochastic full. So these settings 10, 3, and 10 are the settings that would be used for K period, slowing period, and D period. However, I did leave them in the same order as the default in TradeStation, so we'll go ahead and we'll format the stochastic slow so that you can see that I've got these set up here. It's stochastic length, smoothing length 1, and smoothing length 2 set to 10, 3, and 10. So they're in the same order. I gave them different names only because I've probably got a lot of people that are going to be buying this that already purchased the Thinkorswim version or have already been anticipating the release of this version on TradeStation, and they're familiar with the version that's on Thinkorswim. So I wanted to make sure that we had some commonality there among them. Okay, and real quick before we move on to the scans, I wanted to show you we also have the hidden divergence available. You can see that I've marked some of these signals. You go ahead and pause the video if you would like to examine these closer. I've already covered a lot of this in detail. We need to get moving. So I also wanted to show you, we'll minimize this radar screen, and you can see that we've also got a radar screen available for the hidden divergence. And I want to show you this one thing here. You see COP You see that it's got 0 set up here for the count and set to broken, and there's nothing showing for the divergence type. I'm really glad that that appears there because I want you to see something. You right click and format the hidden RSI stochastic, and what we do is we go to the general tab and we change this value here. It's set to 200. That's the default. It should be more than enough. Let's go ahead and cancel this, and let's go ahead and look at the COP chart. Yeah, and you can see that there aren't any hidden divergence signals. How far back do we have to go? Yeah, you have to go back pretty far to find any. That's why that's showing 0, because this radar screen has a limit, and that's for performance. You really don't want to set this max bars look back setting to some astronomical number. It's going to slow down the performance of the system. Let's try 300 and see if we get, there we go. So we changed it to 300. It allowed the radar screen to look back far enough to find that divergence signal 168 bars ago. 200 bars wasn't enough because you also have to accommodate the beginning and end point of that divergence indication. Okay, glad we ran across that because I know it's going to come up and people are going to ask, hey, it's broken, why is this not working? Well, I'm just going to point you to this spot in the video and you're going to go, oh, I should have figured that out. Great. Okay, so next we're going to show you the scans and wrap things up with the live demo, and then we'll give you the link and show you how to place your order. Okay, and here you can see a scan that I have already set up. We're going to walk you through this step by step how to build one. It's really quick and easy, and we're going to have the ability to run scans for both the standard divergence as well as the hidden divergence. Remember that you've got an HTR that you want to look for when you're picking this for either the radar screen or the scan. You don't want to pick the HT version. You want to make sure you pick the HTR version. One is for charts, one is for radar screen and scans. And the results here are left over from what I ran over the weekend during testing, and we'll go ahead, we can run that again and see what's changed. You can see that it takes a little bit of time to run. And there you go. So you've got Apple with double negative divergence 3 bars ago, and it's holding. You can see, for example, McDonald's. That's showing a MACD value divergence, negative divergence, and it's 6 bars ago and it's broken. So you can see that that price action has already broken the divergence signal. So let's go ahead and take a look at the scan. We're going to go ahead and format this. And you can see that I've got it set to a close of 2 days ago greater than $10. I've got volume average over 10 days greater than 500,000. And the next 3 lines here, these are from the HTR version of the divergence MACD. And so you've got one field is the divergence type, then the next one is the count, and the last one is the divergence trend. Now the first and third are set to display only, while the count is set to less than or equal to 8. Let's say we wanted to set it to less than or equal to 5. We run the scan again. You can see we've narrowed down our list. We've dropped off a few from the results. And you can increase that, decrease that. You can apply it greater than count, less than count. You can do that any kind of way that you want. I figure that's the best way that you can use the scan to look for signals and find out whether they're still holding or have been broken to find opportunities for trading. So let's show you really quickly then how to go ahead and build a scan from scratch. We're going to do that, and then we're going to go into the live demo. So we're going to go ahead and click the insert, and we're going to call this temp, and you can see the folder is currently set to videos. And you can add a new folder by simply clicking the button. We're going to click next, and then we get to choose our symbols. And you can choose all stocks, you can choose all Amex, all NYSE, and then at the bottom you can click and select items that you want to exclude from the list. And I'm assuming that you folks really understand scans. We don't want to go into too much detail here. We can do follow-up videos later to give you more details on how to run scans, just basic scans. So we're going to choose here as custom symbol list videos, and we're going to go ahead and click next. And then for the fields, we're going to go ahead and go to price, and instead of 2 days ago, I'm going to pick 1 day ago, and I want it to be greater than $10. And then we'll go ahead and click this again. We'll collapse price and go to volume. You can see here we've got volume average 10-day, and then we're going to go ahead and click that greater than and put that in as 500,000. And now is where we select our indicator. You could put in more filters if you want, but now we're going to select an indicator. So we're going to click select criteria. We're going to collapse volume, and you can see down here at the bottom is indicator. Let me scroll down a little bit so you can see that easier. You see that indicator, so then go ahead and click that, and then we're going to choose from our list. Now I'm going to click once in this box, and then I'm going to press H on my keyboard. That's going to take us right to the first indicator that starts with the letter H. Then I'm going to scroll down until I find not the HT. Remember, I told you there's an HT version and an HTR version. Okay, you don't want to use the HT, you want to use the HTR. So here it is, the HTR, Divergence MACD X2. We'll go ahead and click OK. We're going to have to add this in 3 times. So let's go ahead and do that. Indicator, I wish it would remember my last selection, that would be handy. And make sure that you pick the same one for all 3 of these. When I was testing this for the video, I accidentally picked one that was different, and I ran the scan and I didn't get the results I was expecting. I was like, holy cow, what's going on? It broke. And it dawned on me what I did. I picked the wrong indicator. I mismatched them, so to speak. So we've got all 3 are selected as HTR Divergence MACD X2. You can see that we've got the first one is divergence type. We're going to set that to display only. The next one, we're going to change that to count. We're going to say, what do we want? Let's say greater than, okay? Greater than equal to 5, let's say, because we want to know if something has been established for at least 5 bars in the same direction. And then we're going to go to divergence type. We're going to change that to trend and change that to display only. Something I should mention here that I discovered while building a scan: if you don't have real-time data enabled for NYSE, Amex, and NASDAQ, then your scan results are going to be limited because it's only going to pick up those lists of stocks for which you have real-time data enabled. I had it disabled, and that helped me to actually do the live demo. I just wanted to make sure you guys were aware that that was the case. I didn't know. Let's see, we'll go ahead and hit finish so we save it. We could have just run it from there. Notice that's the one that's temp. So go ahead and run that now. And there you go. You can see we've got a long list of stocks to review. You can see some are broken, some are holding. You can see how many bars back. Everything is greater than equal to 8 because that's the value we put in there. So that's it. That's the scan. And you guys can experiment with that and play around with it, and I think that it's going to be very valuable and help you to identify the type of signal that you're looking for as well as the direction that you want to trade in. Okay, we're going to get right into the live demo now and then show you the link where you can go ahead and place your order. Okay guys, welcome to the live demo portion of the video. I'm going to right click the chart and select Format Analysis Techniques, and I'm going to select one of the indicators. I'm going to turn off the Divergence RSI Stochastic. I'm going to turn off the RSI. Now I'm going to select the Divergence RSI Stochastic, select Format, and then go to Alerts, and then Enable Alert. And you want to make sure it's set to Alert once per bar interval. On a chart-based alert, that's my preferred setting anyway, because I want to be able to set the alert to sound each time there's a new bar. If there's another signal, we go ahead and set it. Also, I want to show you that I like to set up the sound as well as the pop-up. So go ahead and format the hidden divergence RSI Stochastic. We'll go ahead and go to the Alerts tab, enable the alert. Again, it's just the same exact setup here that I'm using, except I'm going to use a different sound for this one. We'll show you how to do that. Go ahead and click Audible, and we'll go and make sure that it's visual. Okay, we're going to change that to sound. And before we hit OK, let's go ahead and change this to a different sound. And we'll change this to pager. Hit play. So you can go ahead and sample the sound and make sure that that's the one that you want. And we'll hit OK and OK, and then we can close the Format Analysis Technique window. Now that the alerts are set up, let's go ahead and fast forward the live demo until we get to our first signal. And don't blink here, because in the lower right hand corner you're going to see a line being drawn that indicates positive divergence, and just that quick it disappears. So once again, remember that setting that I told you about, alert on close. If we had that value set to false, then you would have had an alert be triggered even though that signal was gone in a flash. So I want to show you what it looks like once these signals lock in. And as long as you have that setting, alert on close, set to true, then you won't have to worry about getting a false signal, because the signal will only trigger an alert once it's locked in. And at this point, I'm going to go ahead and enable the labels. So we're going to format analysis techniques. I'm going to format the divergence RSI indicator. We're going to go to the inputs section, and we'll go down to show divergence labels. It defaults to false. We're going to go ahead and change that to true. Hit OK, and then our labels will show up. So this way we can tell what type of signals are being triggered. Okay, we don't have a clock on this screen, so we can't really see when the bar is going to close, but I can tell due to hindsight that there's a signal coming up. This is going to lock in here. So you heard the audible alert, and you can also see that we've got this card that shows up for 5 seconds, and it tells you exactly what type of divergence was just locked in. Okay, that last chart was a 5-minute chart on a regular stock. This one now is a 512 tick chart. So this is a tick chart on the Euro US dollar pair. You can see this signal is probably going to lock in here. There we go. So the signal is locked in, and we get the little pop-up card that tells us exactly what type of divergence was found at that alert. So at this point in time, that signal is locked in because that bar to the right has closed and the new bar is opened, so that's a locked in signal. And next we're moving on to ES. This is the E-mini. This is the E-mini S&P, and this is a 3-minute chart. I wanted to try to show you a variety of different time frames. I did test this, as you saw, on tick charts. I tested it on range, on momentum, on volume, and everything seems to be working fine. Oh, and that's an alert that comes up when you change a chart and there's already a signal present when you change the time frame. So I changed it from 3-minute to 5-minute, and boom, there was a signal present, so you get the alert. Figure I might as well include that in the live demo. So here we're looking at back to 5-minute time frame, and this is a Stoch COPD, this ConocoPhillips. And this time you can see that we have a hidden divergence indication, and it hasn't locked in yet. There it is. So that signal has now locked in, and that's a hidden divergence RSI stochastic, and that's a stochastic full positive divergence. So you can see that clearly right there on the little pop-up card, and you know exactly what that alert was. So we've got one more to show you, and then we'll go ahead and introduce the link where you can go to our website, fill out the request form, and request to purchase these indicators. Okay, so here we are on the NASDAQ futures, and we're going to go ahead and set this to a momentum with a range of 2.5. We'll let the chart refresh here. You can see that there is a signal ready to pop on the lower right, and that is positive divergence number 2. Let's see, this is the divergence RSI stochastic indicator. So that dark green line there is indicating divergence of the stochastic. That's a full K positive divergence. You can see by the legend there in the upper right. So this is going to lock in here pretty quickly. And there you go. You've got the audible alert as well as the card that pops up telling you exactly what type of signal was just created. Okay guys, thanks for watching the live demo. Now we're going to get to the part you've all been waiting for, which is where can you go on the website to fill out the form and submit your request to purchase these indicators today. Okay, and if you are watching this video from a link that you found on our website, this is the page where you found that video. And this gives a basic description and then a link to the video. And we'll go ahead and bring in that link right now. It's right up at the top of your screen so that you can go ahead and type that into your web browser and get to this part of our website where we provide the order form for buying the indicator. And again, I want to repeat, every single order is handled by a human being. So we don't have a shopping cart on our website. We don't process credit cards on the website at all, anywhere. We don't have a place where you can just click and buy now. What you do is you fill out this form, we'll go ahead and give the instructions here. How does this work? All right, fill out the form, make your selections, press the submit button. What happens next? You'll receive an automated email confirmation containing the details of your order. Shortly after that, you will receive an email from a live human being letting you know your order is being processed. Very soon after this second email, you will receive an invoice generated through PayPal. You don't have to have a PayPal account to pay. You can use any credit card that PayPal accepts. They just simply happen to be my credit card processor. After the invoice from PayPal is paid, a live human being, once again me, will email the study and scan files to the email you provide below. And here's the pricing that we've got for introductory pricing only. This price is going to increase. As I said, it already provides more functionality than the similarly priced indicators on Thinkorswim platform. And here you can see the hidden divergence pricing. And the hidden divergence, again, as I said, it doesn't have a lot of the bells and whistles as far as labels and the color legend and things like that. So we've cut that down to a mere $79. Once again, as I said, the prices are going to increase because we've got a lot more functionality in this than these prices support. So we'll scroll down here and you can see the order form. I'll go ahead and fill this out. And everybody knows this email by now. I get tons of emails here and love every bit of it, and direct a lot of people to our Q&A forum because that's the best place for me to help them. But you can see I provide some instructions here, and all you do is simply make your selections. And as you make these selections, you're going to see these fields are updating. If you pick this one, there's no discount. You can see the discount is 0, discount percent is 0. But if you buy these two together, you can see then you get a discount of $64. So that ends up being a 20% discount if you buy both the standard divergence indicators, the MACDX2 as well as the stochastic and RSI. Let me show you another combo here. And if you select, for instance, the MACDX2, both the standard and the hidden, then you're going to get a discount of $39. And that ends up being a 16% discount. So you grand total for those two indicators, both the standard and the hidden, $199. Then if you want to buy the full boat, then you go ahead and check all the boxes. You can see you get a discount of $142. It ends up being close to 30% and a grand total of $334. I'm sure that for the prices you guys are used to paying for TradeStation indicators, this looks like an incredible bargain, and it is. I spent a great deal more time on this than I did the Thinkorswim version, but I really enjoyed it. I love that RadarScreen. I can't wait for the next idea to come along. Be sure and enter any comments or questions you may have. For example, we do custom versions of this. For a $50 add-on for either the standard or the hidden, we'll do a customized version of this. Remember that each one of these will do 2 lower studies. So if you buy the RSI and stochastic and you say, I don't like these stochastic, I'd rather use a CCI. Can I get a version that gives me an RSI and a CCI as my lower studies instead of the standard RSI and stochastic? Well, yeah, we can do that. And it's $50 for each study that we have to modify. Just pay the full price for the standard version, and whatever you want modified on for the lower studies, we just go ahead and charge you $50. So once you've gone ahead and entered your comments or questions, if you have any, then you go ahead and hit the submit button. You'll get a confirmation email that's auto response, and it'll give you a basic summary of what you ordered, and then pretty soon you should be hearing from me via email. Guys, that's all I've got. I really appreciate you sticking around for a long video like this, and if you skim through the video just to get to this section where you can find out how to order it, just be aware that if you get these indicators installed, you're not going to know how to use them until you watch the video. So be sure, if you've scrubbed through the video to get to the very end to find out how to buy them, be sure you go back and watch the video. I'm going to do my best to index in the description of the video where each section is, the live demo, the radar screen, the scans, the settings, and everything like that, so that you guys can come back to this regularly as a resource to learn how to use these indicators. Thanks again, guys. Take care.
Thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues. Thanks, and take care.